The South Korean government has projected a period of recovery for venture investment in the country, expected to take place in the first half of 2024. The Ministry of SME and Startups relayed in a press conference on investment trends that while the amount of venture investment and fundraising fell last year, it should not be viewed as a negative development. This is because Korea's investment decline was less significant, clocking in at 11.9%, than other major countries such as the United States, 30.9%, and Israel, 40.7%. As a result, investment sentiment is expected to bounce back in the first half of 2024 as economic conditions improve. A government survey revealed that venture capitalists invested KRW 6.8 trillion in Korea in 2022, marking an 11.9% decrease from 2021. And StartupRecipe's investment report also indicated a 9.9% drop in investment in 2022 compared to 2021. The government addressed concerns about the domestic venture investment market shrinking, explaining that it is presently undergoing a process of normalization following the expansion of liquidity due to fiscal policies during the 2021-2022 coronavirus pandemic. As the market was overheated in 2021-2022, the base effect is large. Therefore, 2019-2020 is considered the normal investment level, while 2021 was an overly active investment market. The government recommended utilizing this time as an opportunity to adjust overvalued corporate values and select and support promising startups, as doing so would result in a healthier venture ecosystem. By making these adjustments, overvalued corporate values will be brought in line, leading to further growth in the venture ecosystem. In addition, the government announced earlier this year its plan to leverage incentives to drive investment, taking a proactive stance in promoting economic growth. As part of this initiative, managers who meet the investment target ratio, which is 40% in the first year after registration, 70% in the second year, and 90% in the third year, will receive additional management fees. They will also receive points for selecting projects to invest in for the parent fund in the following year. These measures are expected to promote the establishment of private venture capital funds, thereby fostering a more conducive environment for investment. In recent times, the Cabinet approved a bill to amend the Venture Investment Act, which permits the establishment of private venture capital funds. Through these developments, the government aims to drive economic growth and build a more vibrant venture capital ecosystem that facilitates the growth of promising startups. By leveraging incentives and policy measures, it hopes to create an environment that attracts more investors, thereby spurring investment in the country's burgeoning startups scene. Thank you for watching, and more information can be found on the StartupRecipe website.